And we're just a short time away from market opening on Wall Street. Of course, the Standard & Poor's downgrade that happened there happened after the market closed on Friday in the US. And joining me now from Washington is our North America correspondent, Lisa Miller. Well, Lisa, the futures markets have been running, of course. The Dow Jones, the S&P 500, NASDAQ, the futures markets all down, I think, around 2%. It doesn't bode terribly well for the opening.
Tikki, they've been sitting between down to 2.5%. That's been fairly solid over the last couple of hours. We're just under 10 minutes until the markets open on Wall Street. The commentary this morning seems to be mixed, but most people are suspecting that there is going to be certainly a bit of a rush initially until perhaps things settle down. But no one is really sure because, as you say, this decision from Standard & Poor's was released at about 8:30 p.m. on Friday night. There'd been a bit of chatter about it during the day, a few rumours that it was coming. So some of that was priced into the market and gave us those roller coasters that we saw on Friday. But just how much is truly unclear. And I've seen a host of experts speaking about it all this morning. And the reality is that no one is really sure how it's going to look.
Is there a feeling that QE3, another level of quantitative easing, is indeed on the way? Because I know we've got the Federal Reserve meeting tomorrow, don't we?
Well, yes, and of course Ben Bernanke sort of started this chatter himself when he appeared before Congress in July and said that the Federal Reserve still had a few options open and it would consider some further quantitative easing if that was required, if the economy continued to slow. Well, since then we've seen some shocking GDP numbers, we've seen bad unemployment numbers, and now, of course, this Standard & Poor's downgrade. So the expectation is that what was going to be a fairly routine Tuesday meeting of the Federal Reserve is now going to be watched very, very closely, and the reality is a QE3 may be around the corner.
And interestingly, I see that Moodys, one of the other two credit agencies, has warned just today that it too could follow Standard & Poor's and downgrade the US before 2013 if things don't improve. I mean, how significant is that?
Tikki, I think the timing on this is significant. This is basically a reiteration of Moody's previous statement that it was sticking with its AAA rating because it believed the US was putting in place some debt reduction plans. What they've done this morning is basically say, look, that AAA rating only stands if debt is reduced. It was like a little reminder. It puts itself at odds with S&P because S&P basically decided it wasn't giving the government any more time to bring that debt down, whereas Moody's is giving it a little bit more time, but putting it on notice that it's not a given, this AAA rating. Of course, the third major ratings agency, Fitch, is sticking with its AAA and has not yet spoken or reacted to the movement of the other two ratings agencies.
Lisa Miller, we'll try and get back to you a little later in the show once the market's open, but that's all for now. Thank you.
Thanks.